Good afternoon, everyone. It's just after the American Open on the 15th of September. I'm looking at VectorVest UK, and as you can see, all of the measures of the trend on VectorVest UK are up. This is quite different from VectorVest USA, but I think that the UK market is benefiting from one, the weakness of the pound, and two, a subtle move from tech into value stocks, which helps the UK market. That's still a trickle. Today I want to talk pretty much about gold, because gold's at an incredibly important juncture at the moment. And the first chart that I've got is BULL.L, which is an exchange traded fund that follows the bullion or the gold price. And I think it's quite easy to see the trend. And then this market, like the gold market, has pulled back into a five-wave, what technicians like myself refer to as a continuation pattern. And it would seem to have broken out of that pattern. Now, the gold price is quite strong. A few minutes ago, it was trading at $1967. Now, the two levels that are important, ladies and gentlemen, are 1908 on the downside and 1978 on the upside. And my friends on the floor at COMEX tell me that they believe that if the market breaks above $1978, that will confirm that breakout. So those are the two levels to keep your eye on. A breakdown below 1908 would in fact suggest that market needs to go lower, and there's another leg down. I don't think that's going to happen now. I was a little dubious about that last Friday when I spoke, but it looks to me as if we're going to move up strongly from here. What shares should we look at? Well, there's an awful lot of big miners around, but I'm going to look at two small miners today. Now, one of the great joys at the moment of VectorVest UK is the level of expertise among our users, and that's grown geometrically over the last couple of years. At our Q&A session on yesterday afternoon, one of our subscribers, Charlie up in Lincolnshire, in fact identified Hummingbird Resources. As you can see, the share price is trending up. Down below the share price I have earnings per share, and as you can see, since June this company has taken earnings per share from about 2 pence to about 8 pence. It's run very nicely here, and it's now pulled back in a rounding pattern, and I think just about to go. So we've got an undervalued share, growing earnings per share very strongly indeed. These small miners are highly leveraged to the bullion price, and if the bullion price stays at 1967, they're going to make, in common old-fashioned language, a heap of money. If the share price should go to the 2200, which I think is the gold price go to the 2200, which is I believe is the next target, then this thing will rocket, and the VectorVest valuation and the technical target from this rounding bottom are pretty much one and the same. If we put on volume, maybe blow it up to 3 months, we can see how as the price was rising, the volume was rising. That's really good. And then a couple of days ago we got this huge volume bar, 10-12 million shares traded in the one day. It's now going sideways on falling volume. That's good. I think wait for it to break up through that high. Clearly there's old highs across here, and break up through that high, and then I think, in the words of my old rugby coach, the ball is in, the game is on. So that looks good. And the second one is a share that I know exceptionally well, which is Pan-African Resources. Those of you that know me will know that I lived in South Africa for a very long time. I went there for 6 months to play rugby once, and I stayed 35 years. This is Pan-African Resources out in what used to be called Eastern Transvaal. It's now called Mpumalanga. And that's the share over the last 6 months. Again, earnings per share rising very strongly. as Benjamin Graham said, earnings per share growth is the engine that drives the share price. Significantly undervalued and pulling sideways in what technicians like me refer to as a falling wedge. Very positive pattern indeed, and it seems to be breaking out of that pattern as the gold price breaks north of that little 5-wave continuation pattern that I spoke about a second ago. I think that both these shares are high probability, low risk trades. But I have to point out, folks, that they are small mining stocks. They are not worry-free stocks. If you want a worry-free portfolio, I do 3 seminars a month. It's called the Proven Approach, and if you go to VectorVest.co.uk, just go to live events, scroll down, and you can register for one of those. There I'll show you how to put together a worry-free portfolio that can be managed in a few minutes a week. These shares are not worry-free shares. They need to be managed and managed aggressively, and as I keep telling people at the seminars to keep them awake, it doesn't matter how well you know the horse, never stand behind it. So risk needs to be managed. Don't avoid risk, but simply manage it. And on small gold shares, risk needs to be managed by very aggressive stop loss orders. I think they both look good. I think that just wait for gold price to get north of 1978 and all should be good. I hope you found this useful. Thanks very much.